Hey everyone, I Priyank Sharma. Welcome you all on our YouTube channel. We are going to discuss another intraday strategy today, and this strategy is one of the favorite strategy, not mine, but of my subscribers and viewers. Why? Because this is the most watched strategy on YouTube which have ever been explained by me. Do you know this strategy cumulatively has more than 2 million views and more than 10,000 positive comments, and the experience of traders who have used this strategy and are using this strategy. I use this strategy from my beginning days, and I always say in every of my video that I teach this video to all the beginners. Why? Because when we start learning technical analysis, initially we need a very simple strategy and we need the confidence. Why the confidence? Because when we start trading, we keep hitting targets and stop loss, and sometimes number of stop losses in a row can demotivate us, can ruin our psychology about trading, and that's where everything get messed up. And with the time, even after learning a lot of things, we keep struggling to get that psychology back that I can trade. And this strategy is, you can say, a kind of wonder box for all of you if you are a beginner and you are a learner of technical analysis in beginning, or you want to start trading, because this is one of the easiest strategy I have ever learned, I have ever taught. It's very easy to use, very easy to understand, very easy to implement, and it actually provides very good results. So far, people have received it. How much you are going to benefit it, you are going to tell me in the comment section after I explain it to you. EMA. What is EMA? In last video, we learned about RSI. In the same manner, we will learn first about EMA. What is EMA? How to use it? And then we are going to the strategy. So we call it exponential moving average. Let's understand it. So first we will understand average. What is average? So if there is a classroom of, you can say, let's suppose 50 students, they got their mark in any of the subject. So how would you define what is the average of the classroom marks? What you will do, you will add the marks of everyone and divide it by 50. It's very simple. So with the average thing, we can say that this class has performed at this level, not the particular student. We are talking about the whole class. In the similar manner, in trading, trading is all about numbers, trading is all about mathematics. So mathematicians or the traders has realized that average price of some previous days or some previous period can work as support and resistance on a live chart. So with this theory, everybody started calculating the average price of previous days, previous months, previous weeks, or previous minutes if they are using an intraday chart. In the same manner, when they were calculating averages, how it was used to happen manually, let's understand this. So let's suppose here are some candlesticks forming this way. Okay, some ups, some downs. Now you got, let's suppose, 10 candlesticks and you want the average price. So what you will do, you will select any of the one price, either the open price, closing price, highest price, lowest price. So what's the standard way is to use the closing price. So I will add all the closing prices and divide it by 10, and it will give me one price which would be the average. Very easy to understand. Now, the next time, the next candle will form, and you again need to have the average of only 10 candlesticks. So what you will do, you will remove the last candlesticks and you will use this one. So this one you will remove, right? And this one you will add. Then you will have a new average. Correct? Then you will get two new candlesticks. You will remove last two candlesticks. Correct? And then you will have new average. So this way, you will keep doing it every day. That means if you draw a line with these averages, it would be your moving average. Why? Because it's moving every time a new candle forms. So we started calling this line, which shows the average of a particular period. It can be 10 days, 20 days, 40 days, 100 days, 200 days, 200 hours if your chart is hourly. And if I'm using 5-minute chart, so it's overall the number of bars, number of candles you are using in this average. So we call it moving average, and it's an indicator which most of you would be familiar, right? With the time grows, as the time grew, more people came to trading, more experts came to trading, they started saying, if I am using a bigger moving average such as I'm using average of like 20 days, 50 days. So sometimes my average is not as effective as it should be. Why? Because it is using the data of previous 20 or 50 days equally. Correct? So that's not going to help us. We want latest data because chart can be like this. Sometimes your chart can be like this, like first 15 days it was moving like this, last 5 days it jumped like this. Now, if you are taking the average, then you would be giving more value to this price action. But as a trader, as a short-term trader, you need to give more value to this price action. Am I right or wrong? Right? So you want the latest one. That's why they added a formula of exponential, which you might have heard as e to the power x, or you might have seen a graph like this from your school life like this. Correct? The exponential chart. Well, you might have heard exponential growth. You want to make money exponentially. Am I right or not? So that's way this way, they started using this average as exponential and started using this value more in the average and this value less. So it still counts the same 20, 50 or 100 days, whatever the amount you choose to use the moving average for. And that's how it becomes exponential moving average or moving average exponential. All right. But don't worry, from this video, you might be thinking, Priyank, you said it would be the most simplest strategy. It would be very easy, but you took me to the worst subject of my school life, that is mathematics. I used to I used to pass it like just I get passed somehow, and you are teaching me mathematics. Yeah, don't worry. It was just to understand the indicator because it's my philosophy. Whatever the indicator you use, you always need to know what indicator is all about. But if you don't want to understand that, just skip it. Let's come to the directly trading, directly price, and directly charts and understand EMA better. Now, whatever the exchange you are using, whatever the broker you are using, or the platform you are using, you will go to the indicator tab. In the indicator, you will write here moving average or EMA directly. That would be okay as well. You can write anything EMA, moving average, MA, and you will get moving average exponential. You can even start it to add it in your favorites in trading view. Now I clicked on moving average and now I will turn off this pop-up and you will see there is a line came on my price chart which earlier it was not there. See, if I go back, there was no blue line. Now we have a blue line there. And if you want to change the color, as I always tell, if your wife likes another color, if you like another color, or even your girlfriend, you can just change it to her favorite color as well. So that you can say, babe, I'm trading your favorite colors here. So just let me do. Okay, so what we are going to do here is we will be using the time period as 21. You can see, you can just go to the settings and you can write down here the length, whatever the amount you want to use. We will be using 21 days, okay? And I just added 21 here and I clicked OK. So now you can see this line is a little bit wider than the earlier. Also, you can make some changes here. What is that? I'm going to make this line more visible to you, so I'm making it darker, okay? So I just made it a bit thick so that you can watch it clearly, all right? So this is EMA 21 we are using. So what does it mean? If I am using EMA 21, it only means that I'm using moving average exponential of 21 previous candlesticks, okay? This is the simplest thing. You just need to put the indicator at 21 and that's it. You are good to go. You can change the color as per your choices. Now what happens is this line here, right? This line is going to work for you as ready-made support resistance. So ready-made support resistance, what does it mean? That it will act as a support level when you want to buy it. It will work as a resistance when you want to sell it, okay? So this will work automatically. You don't have to draw any of the level on your chart. You can just quickly go ahead and use it directly. No other lines needed. Sorry, no other lines needed, no other indicator needed, nothing else needed. You just now need to understand the strategy directly. It's so simple. I just added EMA 21 and it's good to go. All right, then let's move to the strategy. So what we are going to do here is, if you know support resistance, if you don't know, don't worry. In future, I'll be making the videos about that as well. But if you know what you usually do, if there is a level called resistance, if price is coming up like this, what you prefer to do, a breakout, a retest, and price goes like this. This is how we learn it, right? So what we are going to do in this strategy, we are going to enter here. We are going to use this stop loss and this is going to be the target. Very easy to understand, very easy psychology. That's it. If price is coming from the top, what we are going to do, we are just going to enter here. This is going to be the target and this is going to be the stop loss. And this strategy has the smallest possible stop loss in any trade setup, the smallest. And whenever it gives the a good move, it can give you numerous amount of risk to reward ratios. It can many times give 10 hour, 12 hour, 15 hour. It's so simple, so easy, so convenient, and so easy to use. You are going to be, you know, you're going to be surprised that trading could be this much easy to impact, to utilize on the charts. But the hard thing comes up with your psychology, which you will have to work on. All right. Okay. So let's come to the point. Here, what we are going to do next, we need to understand this concept with the help of moving average. So what we are going to do in this strategy. So let's suppose you have your moving average here like this. All right. This is your moving average going on. Price as well going on above it, below it like this. Okay, so this is your price action. I'm using blue color. So what you will have to do is you will have to see a particular setup to implement this strategy whenever price goes up like this. Okay, so first we are learning for a long position, a buy position, then we will learn it for the short position. Short means that you are selling first and buying later, and long position means you are buying first and selling later. So whenever price goes like this, so the first condition is price must be crossing the moving average. If price is coming like this and going like this, no, this is not your strategy and you're not gonna use it here. All right. So what you're gonna do, you are, okay, let's do it this way. I will have to make sure next time the eraser don't do it. So whenever price break above it, go like this. All right. What you need to understand is the first candle which breaks it, the first candle which breaks it, open of the price does not matter, lowest of the price does not matter. The point which matters is the closing price. So the first candle which closes above your moving average, you see it. Now you can see when price is moving from down to up, this would be a bullish candle or a up close candle, right? So it would be a bullish candlestick. Whenever this candle closes, you become focused on your chart. Now you look for next 3 candlesticks max. This is the condition. 3 candlesticks. 1, 2, 3. So any of the next 3 candle, if becomes a bearish candlestick. So let's suppose the next candle is again a bullish candlesticks. Okay, next maybe possible. And then let's suppose the third candlestick is a bearish candlestick. Okay, this is a bearish candlestick. So I'm putting a mark down. So bearish candlestick or a down close candlestick. So its closing price should be here. Correct? Right? So you have to see in number 1, 2 or 3, any of the 3 candlesticks, it must be a bearish candlestick. As the bearish candlestick form, you get ready to take the setup because your setup is about to form. All you have to notice is second condition, this candle should not close back below it. No closing below. Okay? No closing below EMA. If it closes back below, then your setup ruins, okay? Or if any of the candle closes below this, then your setup is not forming there, okay? So the candle must not close below this. It can wick down below this. That is totally okay. Now, you would place your entry just above it. You can use a even buy stop order, like you can put an order in advance. Whenever now price comes back to this, you enter here. Whatever the low forms here is your stop loss, and then you target above minimum 1:1.5. You can see in this channel, the first video I made, there I told you a setup which was making 1:1 on the first target. This one is going to make 1.5 R on the first target, and later on you can trail in the same manner like I taught in the last video by trailing your position, putting the stop loss to near your entry, and holding it to the targets as long as you can. I will teach you again in this video how to trail in this particular strategy as well in the end. All right, so this is the strategy. That's it. Next candle forms like this, closing, let's suppose here, and then forms like this. There you enter and then you go. You're good to go. It's as easy as that. Okay, so let's understand now if this strategy is in downtrend, how will it work? So let's suppose I'm going to use the blue color again. This is your moving average. Okay, and price is coming like this from top to down. The first candle which closes below, all right, the closing must be below. Now you count to 1, 2, 3 candlesticks. So 1, 2, 3, any of the 3, let's suppose the first one is bullish candlestick. So the first condition is candlestick must close below. Second one, the next candle must be a opposite color candlestick. It should not close above, no closing above. That's it. Its low becomes entry, and whatever the high here, because the next candle may make a wick like this, so this one would be your stop loss. So whatever the high is here, that is your stop loss, and this entry, and then 1.5R is your minimum target. How to trail it, we will discuss it later on. All right, so that's how this strategy is going to look. Now let's go to the charts and watch it. That's it. It's so simple, as I told you. All right, and if just in any case you missed, because as I told you, I'm a Hindi spoken person, and but a lot of people wanted me to make some videos in English, and I don't know how I'm doing it, how good I'm doing it actually. So it's on you. You need to see it. You need to tell me if it is doing good or not. Okay, and you need to comment as well. So if you like it, if you support me, then I'll keep making such videos in future as well. So do we have a setup here? I think 1, 2, 3. No, we are very close to the setup here. I will show you just after. First, I want to show you a perfect setup so that you can remember it. Then we will discuss it, this whole chart. Don't worry, I'm not going to say that I'm showing it on the past chart. Just give me 2 minutes. First, I want to give you a perfect example so that you get it right in your memory. Okay. So, and yes, the time frame question, you can use it again on any time frame. Like I always say, you can use any of my strategy at any time frame without tension. So I have a bearish setup here, a perfect bearish setup here. So let's see it. And I'll be using the replay mode so that you can get it right in the first go and you can understand it very clearly. So there you go. So let's suppose this is my chart, okay? And I'm watching it. I'm watching the price is going up, correct? So it must first close above it. This candle closes above it, right? So what is my next condition? That there must be a bearish candlestick and then a setup. So I'm ready to take the trade. What happens next? The next candlestick forms like this, which is a bearish candlestick, perfect. Then, oh, it comes back below it. So if it comes back below it, no setup is formed. Perfect. All right. Now I know the price is coming from the top and now it's coming to the bottom. So I'll be looking for a bearish closing. Closed. Now I'm looking for a bearish setup. That's it. Nice. I'll be looking for a short trade. What I want in next 3 candlesticks, there must be one green candle at least. Let's see. Okay, the next candlestick is green. Perfect. So we got the candlesticks, right? Now, what is our entry? Our entry would be, if I'm not wrong, the low of this candle, right? That's what I taught you. So you will put your order just below this candlestick, right? And you will wait for candle to enter, and whatever the high next candle make or this candle make, that is going to be your stop loss. It's as simple as that. So, okay, perfect. There you enter. There you enter. At the moment the price trades it, the moment you enter the trade, you don't wait for a closing. Okay. Now I'm putting a short trade tool here like this, and I entered. I'm assuming you are not computer. I'm assuming you would be entering a little late. So I know we are late. What would be a stop loss? Our stop loss would be just above this green candlestick or any candlestick which has made high in between. So this is a stop loss. Very tight stop loss. I think just less than 100 points, right? What would be our first target? Our first target would be 1.5R. So 1.5R. You can always match it with a swing low as well. If you want to target it, you can target it close to this as well. But 1.5R is there. So that would be your first target, especially as a beginner. You won't do much experiment. You will just follow the rules. So let's assume you have target your first level somewhere around here. Okay. This is your first target. And within 15 minutes, you got the trade out. You got 1.5R. If you have reached 1%, there you go. You have 1.5% return over there. It's as simple as that. That's how it works. Now, how do you trail it? How do you trail it? Let's understand. What you can do now, you can put your trailing stop loss just above entry, somewhere around this level of 104959, and you can trail it as long as either price makes a good move and you are happy with profits, or price comes back and closes above that EMA level. Till there, you can hold it. So if you are happy that I'm okay, if it give me 3R or 4R, then I'll book it here. Let's suppose, just giving an example, I'm happy if it gives me this target, or I'll close it if it closes back above EMA. Let's see what it does. Perfect. You are out of the trade. You got 4 hour in this trade. 1.5 hour on the full position, remaining 2.5 hour on the half position, or whatever the position is left, or you can trade it till the price goes back above. So no closing yet. Okay. We are going it good, very good. We would be waiting. Okay, here we go. So we got our first closing here. There you go. So this is where you would have closed your position right there. Correct? Right there, you would have closed the remaining position. Still was giving you 3.44. Or in between, if you have closed, the maximum it gave you was the 7 hour. Like I told you, it is going to give you the whole lots of risk to reward ratios. That's easy. This much easy is this. All right. We will look for another example as well. And then we will look for the live price, if it is doing it or not. Maybe meanwhile I was recording this video with you, it might have created a new setup, and we will see if it is stop loss or target. Because stop loss and targets both are fine as long as it does, right? So because stop loss should not disturb your mindset, should not disturb your psychology, because these are part of the game, and you must understand it properly. Okay. Here you can see again we have a good setup of long here. Price is going down to up. This candle closes. You wait for a bearish candlestick. There you get it. Its high is your entry. Price goes below, no closing below, perfect. Price comes back, you enter here. Your stop loss becomes where? Let me show you. This becomes your entry. Your stop loss becomes this, and 1.5 hours should be for this. I think easily you might have got 2 hour or 2.5 hour there, right? Then you will be holding the partial position till it closes back here, and there you exit the full position, or you book somewhere around there. So that's how you are going to use it for the long position as well. Now we will go to the live chart and understand it as well, because many of you would be thinking, oh Priyank, I've seen so many setups, so many strategies, I've been doing it for years. EMA never works. EMA never works for me. Oh my God. Don't worry about that. Let's see if it works or not. So, what do you see here? Look at this. The first breakout here, right? First three candle, 1, 2, 3. Any bearish candlestick there? No, you don't trade it. But some people are over smart and going to trade above this, because Priyank knows nothing. I can change the settings of the strategy and still comment that's not gonna work. Don't worry, my friend. Just try it out, and you are forced to comment that it's working for you. I know that. I've been watching it. Like I told you, this strategy has been watched more than 2 million people, by 2 million people, at many channels, many places, and you're watching it right now. Okay. So let's check few more setups over there. So we have discussed this already. Now, what you need to remember, where you will not trade like this, you will not trade. This one, no above, no trade. This goes up. Look at this. This is important. Let me show you. This is important. You can learn from it. Where you are not supposed to trade. It's not you do not need to trade. There's no setup actually at all. Look at this. This is the closing. First, second candle is a bearish candlestick. Your entry is this. It never went back above this. So it never went back above. You're not going to trade. Then price comes back below. So setup is not formed. No entry, no trade, no target. Okay. Again, the same. Break below 1, 2, 3. Third candle is green candlestick. So should I short? Yes, you should short. But below this, did it drop below this before closing above? No. So no trade. All right. So remember it. Should I trade? This breaks below. Should I trade below this? No, this is not the third candle, my friend. So you don't do that. So remember all these things, okay? There would be one bonus I'll be giving to anyone who is watching this video till the end, how you can improve your win rate, because there would be stop losses. I'm telling you, there will be stop losses. Currently, I'm not seeing any, but there would be stop losses, okay? So how to improve that? And if you are hitting stop losses, how to improve your win rate? I'll give you one bonus over there. Just wait for a few minutes. Let me see if there is any stop loss I can show you, so that you will have a trust. Yes, it hits stop losses. So do I have a stop loss here? Nope. No trade. No trade. No trade. I'm not getting it. Closing back above. Okay, no trade. Okay, no trade. Okay, no trade. You need to make sure that you fulfill every of the settings. That's how you make less number of stop losses and more number of targets, and trading is all about that, okay? Do we have a stop loss here? No. Look at the setup here. A close below, 1, 2, second candle green. We get the entry here at the low and we got a good target. No stop loss at all. But there would be some stop losses. Currently, I can't see on the live chart. That's okay. But you need to make sure another trade, another entry, perfect trade, perfect target. So it's doing it wonders right now, but it will not do every time. I want to aware you this. And if you hit stop losses, and if you want to avoid the stop hunts, what you can do, let me teach you directly. Let me give you the bonus directly, because in the last 3 days price action, I didn't see any stop loss. So let me give you some bonus points. So look at this. If this is your EMA, okay, first candle closes like this, I'm giving you for a short trade. You can consider the same for the long trade as well. Now these are bearish candlestick, okay. Now you form a one green candlestick like this. This is a one green candlestick, okay? So bullish candlestick. Now you got a bearish candlestick straight. Very good. You plan to enter here, okay? Now next candlestick like this. So you got the entry. Your stop loss would be just here. So sometimes what will happen, especially in sideways market, sometimes market will go up, stop you out and will drop below. It will happen when your candlestick is very small. It may happen. What you need to do in this situation? Start using your stop loss. If you are watching it by your eyes manually. Manually, I mean, wait for candle to close above this. Your stop loss must be on closing basis of 5-minute candle. Closing basis, okay? So if you would be using it on closing basis, you will save more stop loss and you will have a better risk to reward. But there is a condition there, or there will be a problem you will face with the closing of the price. Priyank, I use this as my stop loss because my candlestick was this, right? I thought that candlestick will close above this, that only I will cancel the trade. But candlestick became like this. A very big candlestick came and I lost a lot. So what you have to make sure that you are waiting to close the candle, but you will not wait more than this length, the size of candlestick. You will have the maximum stop loss as equal to the candlestick which you used as an entry. So you can't lose more than 2 hours in a single trade. That's how you are going to improve your risk to reward. That's how you are going to improve your win rate with this strategy. So this was the strategy which I have started using when I was learning the price action thing, when I was learning my trading. It gave me boost and many people have came to me, many people have thanked me. And I'm not saying that I've done something special here. No, I learned it from somebody from internet, somebody from YouTube. I don't even remember. It was like 7-8 years ago. And you might be learning it today from me and you might forget like 7-8 years. But I want to give the credit to the person who might have I watched this video from, or I learned it from any book. I actually don't remember. But this was the strategy which gave me the boost to start trading. And I believe if you will practice it on paper trades, then you will definitely get the confidence you want from this type of trading. And also remember, any of the strategy you learn from any video, anyone from any analyst or from any course or like free from my channels, I don't have any paid service, no RS service paid, no advisory, no investment service, nothing. I don't provide any paid services. Everything is free at the moment on my YouTube channels, okay? So if you have learned from anybody, just give a thank to them. And you might forget me as well, but what you can do if you don't want to forget me and if you don't want to miss my next videos or next strategies, you can just hit a subscribe button and a notification bell for the future videos. And always remember, if you want my daily update, latest updates on markets, stock market, crypto markets, any of the markets, what you can do is you can use my Telegram channels. They are free of cost. You just have to make sure that you click on the link in the description video, in the description of this video below, and don't try to search my name over the Telegram, over the Instagram, because there are many fake accounts of my name. They are misusing my name. They put my profile picture there. They put my name there. They put my registration number there. And they ask people to give them money, impersonating that they are Priyank Sharma, but I'm not that. So I'm saying it again and again in every of my video. I tell everybody, don't pay to fake scammers. Remember it. If you want to follow me in any of the social media, Instagram, Twitter, X, or Facebook, or even I'm not on Facebook right now, but maybe in future I will be, or on Telegram, anywhere, any of the social media you want to follow me, there would be a link in my description where I am available right now. You can just hit the link, follow me there, get the latest update, or watch my videos like this. And also, I've started making these videos in English here on this channel. And if you are liking it, if you think they are giving you any kind of benefit, and you are happy with the type of videos, so hit a like button, hit comment, give your feedback so that I know I need to make more videos for you in English as well. So thank you so much for watching. Bye bye.